Howdy ho, everyone. I think we are going to you live and free on the YouTube channel that is known as Access to Wealth. It's wonderful to have you on board for another week. And what another week it proves, or, well, it may prove to be, well, it certainly will prove to be, I think. But gee whiz, it's kind of weird and wonderful. And we're getting to the point of unprecedented. And I don't really like to use that word, but gee whiz, things are happening, and they're happening thick and fast. And it's kind of a situation where you know that there's only one way to go, but that one way to go is really, really difficult to do. So that's kind of where I'm at. I'm just having a chat to Ash. I think he's pretty much in the same boat.
Yeah.
What do you think, Ash?
Yeah, completely. I mean, it's one of those that the only way you can really trade this market is short, but it's so oversold. It makes it very, very tricky.
Yeah, we
So
weren't
you've
taught
really
that, were we? We weren't taught to
what's
go short when
mm,
it's
well,
completely
well
oversold.
that's the thing. Yeah. That's a really good point. And I suppose that's the key aspect to it. That really, when you're oversold, you should be looking for opportunities to go long, but you just can't go long in this market. We're just talking about some of the numbers. The numbers from China just released have been just obliterated and awful. And the truth is, by the time those numbers are released, it's way too late anyway. To be sort of hopping onto a market. But in saying that, the market, even this morning, it's hopped down. Looks like another 2%, even before we've even started trading this morning. But trying to look for a technical level to go long is proving to be just a little bit too dangerous. I was in a couple of longs on Friday, and both of them, actually provided some profit, which I didn't take because I moved stops to break even, really just seeing if we could actually start some significant rally to the upside while still being in a downtrend, just a bit of a rally to the upside, but just couldn't get out of the range and ended up stopping me out at break even on both accounts. But I have taken some trades in some stocks which have worked out pretty well. And that is probably the best strategy right now, is to actually look at some individual names rather than looking at the overall market, because the overall market is just, it's just in terrible shape. And not only that, but I'm just looking at the FTSE futures here, and the spreads have widened
Yeah,
significantly.
it's amazing, isn't it?
Uh, yes, it is. Yes, it is. US markets are currently suspended on a limit down as well. So we do have, further problems in America. Look like they are having, some just too much downside for it to handle. Sorry, I got distracted because I was just reading the headline here: US dollar falls as Fed acts. So the Reserve Bank of New Zealand and the Federal Reserve both cut interest rates to near zero in unusual intermeeting moves this morning. The Fed also announced a new 700 billion in security purchases to provide additional liquidity, and arrangements with 5 other central banks. Now, the thing is with these points of news and data is there's no doubt about it. At some point, these are going to kick in and actually have some kind of positive effect on the markets. But I guess when you have numbers like we've just had released from China, it makes it a very, very difficult play to assume when those effects are actually going to take hold and actually have any kind of benefit.
And on top of that, you've got everyone doing the same thing, and
Yeah.
everyone's expected to do the same thing, and everyone is doing the same thing. It's a matter of timing. And, do you try and react on an interest rate cut at the moment? We're all doing interest rate cuts, or those who
Yes.
can are doing interest rate cuts.
Yeah.
So, does it really matter to the big picture at the moment? And I think the answer to that is, well, certainly not as it used to.
Yeah.
So, oh, gee, it's not easy to read.
No, it isn't. No, it isn't. I totally agree. It's very, very difficult to read, and it's making it a very difficult market to trade. Right across the board, it's a difficult market to trade. So really, to get out in front of the markets, I would have thought two ways to handle it. You really do go down to very, very short time frames, which is difficult because even if you do go down to short time frames, the stops still have to be fairly wide. And as I say, you are trading a market with huge spreads, which is probably going to discourage some trading anyway. Or the other thing you do is just don't do anything. Let the market kind of decide what and when to trade it, and you'll see that when the spreads start to narrow a little bit more as well, and then see if we can actually get something that we can get on board with the market after that. But I'm quite keen just to let things settle down for a little while, if I'm honest, mate.
Yeah, look, I've got some ideas around macro charts, I suppose I'll call them. And really, I'm only looking at the weekly and the monthly at the moment, not to determine entries, but to determine direction. And the reason I say that is no matter what's going on around the world in terms of events, and this is an event like, I hesitate to say like no other, but really it's getting to that level. I haven't seen Australia in such a position as it is now. And by that, I mean, borders are now starting to be questioned. Do we close them? Borders are being closed all around the world. And I've not seen this before.
Yeah.
I mean, this didn't happen with SARS, to my knowledge anyway. I know we've got short memories, but this to me is really unprecedented. And I spoke about this last night. I don't think we paid enough attention to it, frankly, where what on earth happens next? Because you've got events being cancelled all over the world. Yeah. And I'm not talking about small inter-club soccer matches or the festivals that go on around the world. Everything that is in Australia at the moment, that we're being advised that any event that's got 500 people or more in it has to not go ahead. So here in Tasmania, where we've got festivals all the time to do with food, wine, all those sorts of things, because that's what we do here, they're gone. They're gone. Yes. For the entire season. I delivered some bamboo plants to one of the guys who play in the Hurricanes BBL team here, BBL being a cricket game, a fast cricket game, today. And he's saying even now the season is gone. They've wiped the whole season. So there's that gone. That's just one of a list that's, not even long as your arm. It's as long as your body.
Yeah.
And that's going to keep people from spending. Those who have actually got jobs left. We keep saying, you don't want to be alarmist, but how can you not address the facts? The facts are we're going into lockdown. Pretty much.
Absolutely, everywhere. Mate. Do you know what? I mean, I don't see the argument for not closing borders. I think that.
Nor do I.
If they close the borders, effectively lock down every country. Every country just takes care of who's left in it, because there could be a few people in the countries that probably aren't actually domiciled there. But whoever's left in the country, they deal with each one of those individuals themselves until it's gone, and then open things up back up again. Because it just doesn't make sense to be sort of continuously kind of passing this round in this huge melting pot.
No.
It just it seems the right reaction to me seems to be close everything down. It won't take long. It'd be a lot less painful, in my opinion, if you shut everything down for a month or however long it takes, and then we can just start with normality again. Because otherwise, this could take probably, well, they're talking about even spring next year before we really see the thing go away. But I'm sure they could do it a lot faster than that if they just took the initial short-term pain.
Well, I'm led to believe there's going to peak here in April. Now, I asked the question, how the heck do they know that? And apparently there are ways to determine based on the spread rate, based on X, Y, Z.
Right.
They'll throw it in an algorithm, no doubt, and it'll come out the other end. And apparently it's mid-April here in Australia. Yeah. And I would have thought that we would be one of the last to peak. And well, by all accounts, and no offense to anybody who's Chinese official in the room, it's very, very difficult to put 100% belief in what comes out of China. But if you are of that ilk, then China are telling us that their rate of contracting the disease has fallen dramatically. So in other words, they've gone past their peak.
Yeah.
If we're to believe that, and I'm really, why would they tell a mistruth around that? I can't imagine why. Then that's going to be, I would imagine, the template for all of the countries around the world. So if we go back to the first case in Wuhan, for instance, and count forward however many days that's been or weeks that's been, then I guess that will be the template. So if, it's now rife in the States, and the States can go back and look at day one Wuhan and say, all right, in 5 weeks' time, we're going to peak, or whatever the case may be. So I think they are starting to put numbers on that. And this is coming from WHO. It's not coming from, the radio broadcasts that you listen to, which are generally a long way behind the news and nowhere near accurate anyway. So I don't think that that I could doubt that. And if that's the case, then we can probably come out of this towards the second half of the year somewhere. But in the meantime, how do we deal with it? And that's, the burning question. And the only answer that I've got to that is, as I said, go to the macro charts for me on currency pairs. And when I hit the absolute level that suggests to me that we can't go any further, then we look to trade in the opposite direction. So that's all I can give you at the moment.
Yeah.
Go to extremes, let the market go to extremes, and then look to trade it back in the other direction. That's really the only method that I can put into, unless you just want to crash into the market, right? If you want to crash into the market, I can't argue against it, because this has got further to go, in my humble opinion. But
yes,
based on what I've just said, how far it's got to go is quite debatable.
Yes, yeah. Well, I completely agree, mate. I mean, I'm I'm out here trying to look for opportunities. Just on the back of that, International Consolidated Airlines that owns BP BA, down 12%, another 12% of the open. So it is just an awful situation for airline stocks right now. But I'm out here looking for, attempting to look for opportunities, but the problem is with the gaps that keep happening in the morning as we open up. It's quite hard to actually get on board with this thing, and it feels like it's a bit of a blink and you miss it going on, because unless you were in there's only really 2 or 3 occasions that you could have jumped into this market, and because of how fast moving it is, it's made it a very, very difficult trading environment. And I've got a couple of stocks that I have taken some trades in, and a few more that I'm interested in. But they need some balance, and I don't want a fully long portfolio with what's going on out there. And unfortunately, I haven't managed to balance it against anything, because the short stocks they've already been obliterated. So to actually sort of like get them in the portfolio is going to be pretty difficult.
I can't, and I won't. Yes, you can make a truckload of money if you get it right here. I agree with that, and fully subscribe to those who are able to do so. And if you can, happy days. I think it's a wonderful opportunity for some people who have the systems to get into these moves. I don't, and I don't see why I should just change for and with.
I totally agree, mate.
Yes, there's a truckload of money to be made if you get it right, but there's also high risk involved, in my opinion. So I don't see why I should
on that
go
as well.
into that sphere when I don't normally.
What do we do with that kind of thing then, mate? I mean, because I think when it comes down to it, you should be in the market to learn. But as soon as after you've been in the market and you've had your money in the market, then you've earned your stripes. And after that, really, you can sit back and just go, okay, let's just take the opportunity to educate ourselves. you know, what can we learn from this? What can we learn from the charts right now? What can we learn from some of the fundamentals? Because we are basically in unprecedented times, but these times pass, and then we go back to normality in you know, to a greater and lesser degree. And if people have blown up their account because they've been so keen to get into some of these moves, then they actually miss where the opportunity, where you can trade strategy and trade a market which is, you know, a bit more predictable. You can trade that, you know, rather than just going, right, well, I'm done. I've done my money. So the stock market is too dangerous. I'm out. The stock market is dangerous right now. So just stay out. There's no, what you always say to me, that there's no, well, I can't remember how you put it, mate, but you're effectively saying that you don't have to trade. Where did you put it?
Oh, yes. It's not compulsory.
It's not compulsory, yeah. It's not compulsory that we trade. We can still be traders without having money in the market, because we can get ready for when we do put money in the market. So what, we might have to wait a few days or a few weeks or a few months. Big deal. You know, if you look back at your charts, I'm sure actually waiting probably would have made making money a whole lot easier, because your setup, a genuine setup, actually then comes. So I'm kind of quite happy to sit on the sidelines right now. You know, the market's got so low, and I'm quite pleased with how I've managed my my account to this point, to be fair, because it could have been absolute carnage. It could have been obliterated. But you know, my first rule of thumb, as soon as this happened, was just cut back. You know, cut back your trading, cut back your exposure, cut back your risk. You know, it's just, you know, that's got to be the first thing that you do. Forget strategy, think about risk, and think about your accounts. And the best way to protect your account is just by cutting back. You know, if you're desperate to be in the market, and you're putting hardly anything on, then you can't really lose, because if it goes in your favor, then you can start to add. So you know, that's been my my personal way of handling it, mate. Either just not trading, or just cutting so far back that anything that happens that goes against me just won't hurt.
Look, totally agree. Starmex, Chandru, unbelievable, mate. Pointed out on when was it? Friday, Thursday. When did we talk about that? The triangles killed it, man. Absolutely smashed it. Those of you who weren't here, we were talking about, if I can get my little drawing tool, we were talking about triangles, and there were a couple of descending triangles on pound and euro. Was it pound and euro? I can't remember now. Pound and euro, yeah. What if I'm looking at here? Pound. So nice little descending triangle. Very simple. Trading it ain't so easy, and that's the whole point, guys. How do you get in here? That's the question. How do you trade this? Well, I couldn't find, I wasn't in front of the chart, so I must be honest, when all this took place. But, well, I was on Thursday, but it happened late on Thursday, as I understand anyway, and then kicked the goal through Friday. But, yeah, if you're going to trade it here and get into the market short as a break and retest, then you're going to have to go through a fair bit of pain. And where do you put your stops? There, I think we actually spoke about this. There, or there. And that's the issue that you've got in this market that's moving so violently at times and so unpredictably. Because, yes, you can see that break, you can see the retest, and to go short at that point, gee, you got to go through some pain to get the money, haven't you, at the end of the day? So, yeah, you know, maybe underneath the candles, which is my best modus operandi anyway, don't trade from the break point, but trade from the retest bar, underneath the retest bar. So, yeah, nice, absolutely. So did you get them, guys? Did you actually trade these, Chandru? Did you get onto it, mate, or what? Are you smiling? Are you really happy? I hope you are. Really hope you are. So I guess, to go to my point, the pound was 122 and went very close, eh? To get to my point, I'll have to, I guess, show you what I'm thinking of doing. And that trade I just placed, for those of you who aren't aware, is the pound breakout trade, first candle of London session. I'll give you those levels if you want to follow it, but I repeat, this is in beta mode and not a strategy, guys. It is very much in test period. So what we do here is we go long above the range of the last 3 bars prior to London session, last 3 1-hour bars prior to London session, and those are these 1, 2, 3. That's the current bar there. So we take the high of the range, which is this bar here, the high of this bar, and the low of the range, which is the low of this bar. We put an entry long 15 pips above the high of that bar, and we put a stop loss 10 pips below the low of the range, which in this case is that bar, and then we reverse that. So we put an entry short 10 pips below the low, and an entry long, sorry, a stop loss long 15 pips above the high. So in effect, we've got the high entry as the low stop and the low entry as the high stop. And whichever one of those triggers, we then cancel the other. So if the long triggers, we'll cancel the short order and vice versa. Once we are triggered in, we then trail on a 15-minute chart, and we need 2 bars going in the same direction. So in other words, if we were trailing and got entered here, we would wait for 2 bars after the entry, 1, 2, not on this chart, but on the 15-minute chart, and we'd move our stop down to there. Then if we got another 2, we'd move our stop down to there, et cetera, et cetera. So the stops currently on that one would have been taken out, if you understand my meaning. If you don't, then let me know, and I'll be only too happy to go through that. But it is in beta test mode, so we're not putting a whole lot of weight on this until we get a real good look at what the numbers look like. Back to my point, and my point is this. I only want to trade in the direction pretty much of reversals at this point, for the reasons we've just discussed. I don't want to jump into a market that is one directional. Never has, never will make sense to me. So I don't care what is happening around the world. If I can find a level that is extreme, then that's where I want to trade from. That level is the most extreme level in the near term on this chart, apart from this level here, which we're just about to sneak back under by the look of it. So to form a directional bias, that's what I'm looking at. Looking at the market structures, and if they suit, in other words, if we're at an extreme level, then I'll look to trade off that level in the opposite direction. So in euro dollar terms at the moment, we've got a monthly chart here. That's why I'm looking at the monthly charts, because that's where you get the extreme levels. The extreme level for me is still this channel that we've been following since 2017, or that's where it began. And price, as you can see, is still not happy to go outside there, at least at this point in time. So it looks like we're sneaking back under there. Of course, there's 2 weeks in the month to go and anything could happen. But at this point in time, that level is still being respected, which is marvelous. Dollar yen, very, very quickly, is a complete mess and extremely difficult to predict. We've got high test bars, low test bars. I don't see a very clear market structure other than a descending channel that's appeared here. And that probably looks something like this. So I can totally see that. And as soon as we hit the top of it, we went to the bottom. As soon as we hit the bottom, we've come back to the middle. So, you know, it's been respected. If we find a confluence, more reason to trade it. But guess where we are? Middle of nowhere. So I'm not interested, not even close to interested on dollar yen. Pound, however, I am interested. And here's the reason why. If we go back to 2016, now you guys will remember there are some very key levels here on the pound, and I'll point them out to you. Number 1 level is global financial crisis through here. Number 2 level is, most of this anyway, is Brexit. Number 3 level, we're not even there yet. And that's the hard bit. Are we coming off it or are we going to it? Very, very difficult to say. But this is now another major event known as, or will go down in history as COVID-19, another coronavirus scenario. But this level here is telling me a whole lot, in that major event, global financial crisis, went sideways pretty much until we had another major event, which was Brexit, and we crashed. Now we've gone sideways, and now we've got another major event. What happens next? That's the question, hey? So if this level breaks, then I think we're going to have another major fall. But can we really say that? Because in the last 16 years, we've been to this level twice and rejected it. I've got to say, we rejected it strongly in 2016 as a bounce back from the initial Brexit reaction. We haven't really gone as far this time, have we? Interesting. So in other words, we're getting lower lows, lower highs equal lows. What does that equal? It doesn't look like one. Does it look like one of those, Chandru? Do you think? Is it one of those? Let me bring my drawing tool out again. If I can find the dash thing. Draw, there we go. And color red. There you go. Have we got another one on the bigger picture? Perhaps we do. So yeah, this is not that easy. Not that easy. Yes, I can see the big double bottom sitting here, but we haven't yet had a higher low. So until that is a higher low, it's very, very difficult for me to take a position long. So let's see what happens if we get down to here. What I'd really like to see happen is price get to here, get back inside and retest that. That would be a very strong signal to buy. But until I see that, I don't have a reason to go long pound US dollar. Although I've got some very good judges telling me that the dollar is in precarious territory. And another interest rate cut that apparently we've just had will put a lot of pressure on that, one would think. And that gives me now a reason to go to the Aussie, where I've been the biggest bear that I've ever been, I think, on a currency for such a long time now. And when I look at this chart, I think there's actually more room for it to go. If I look at it that way, I'm thinking, okay, we're at a major level. But if I go just a little bit wider, I'm seeing there's still some room underneath this level. So where's the strongest? The strongest is normally one that's got both resistance and support. And that's the level there. Support here, resistance through here. Don't really see a strong level of resistance where we are now. But that said, gee whiz, we've come down for the longest time, and we are really due a retracement of some substance on the Aussie. So my bearish outlook has probably eased to some degree. But when I look at this chart, I'm thinking, again, if this level goes, then we're down here pretty quickly at 56.5, and it's there. I'll be looking for a rally. Gee whiz, I was actually a bit bullish the Aussie till I had another good look at this chart, Ash. There seems to be a little bit more underneath it.
Yeah, absolutely. Well, that was another one that Justin was talking about, wasn't it? And I guess I was going to say with China going back to work, then it will probably help the Aussie out. But those numbers from China today, I can't see how the Aussie can really get too much of a pickup now.
Actually, the one thing I would say about the Aussie was under extreme pressure, mainly because of bad news coming out of China, but also because of bushfires, because of floods that followed bushfires, because of what else did we have going on at the time? There's so much been going on. And this is even before coronavirus. So the Aussie was under extreme pressure prior to all that. And then when coronavirus hit and China did go into meltdown, then that obviously has affected the Aussie very, very badly. But now this contagion appears to be bringing the Aussie, in my opinion, back to a level playing field. And the reason I say that is because now the pressure's equally spread around the world with coronavirus, that, you know, economies are under extreme pressure from every angle, every way you look at it. So I think now there's a bit of a level playing field, and the perceived, and I agreed with it all the way along, the perceived pressure on the Aussie may not now be so great. And that's why I've just eased off the pedal here a little bit and starting to think, well, okay, we've sold off through all of that. Now we're back on a level playing field, maybe, and we're at a support level. Is it the strongest? No, but we're there. I may be just tempted to look for a reversal here. And if I see one, then yeah, I'll put a little bit in the market. I'm happy with that. And I think that's the key for me. You know, if I see all these levels and they're telling me that we are at strong resistance or strong support, if I do see the beginning of a reversal in any way, shape or form, then I think that's probably where I want to look. And that's why I'm going to the macro picture, because if I do see these levels that are pretty clear to me on most of these charts, if I see them failing, there's a nice double bottom, if you like. Is it a double bottom? It's the bottom of a range. I'll call it the bottom of a range, right? And that's pretty clear. So I don't see any reason why there wouldn't be a trade back up to this level here from a technical point of view. The fundamentals are going to disagree with that in many regards. But my whole point with this is that fundamentals eventually become technicals. And when the pedal comes off the gas with the fundamental reason that these drivers are there, then the technicals are going to kick in. And that's where the opportunities are going to come from. So I'm not saying rush in and buy dollar Swissy right now. I'm not saying rush in and buy Aussie dollar. What I am saying is if you see the normal technical signs like double bottoms, like in head and shoulders, inverted head and shoulders, whatever you're looking for in a reversal pattern, if they appear, I have no hesitation in placing small amounts on them. And if they do develop, then ease into the trade, you know, as it gathers momentum. And as Ash said, the one thing about these crises and events is eventually they turn around. And it's those turnaround points, I think, where we can make a substantial gain or put a substantial impression on our accounts if we're very, very patient. If you can find a way in to the crashes, then go for your life. But for me, it's always going to be about technical levels, and I'm not going to change. Yeah. Sorry, I did rant there for a bit.
But no, I think it's important points, mate. I think they're important points, and I think that is you know, the real message is that if you can trade these on short-term timeframes, but you are looking at 5 and 15, then you know, I think absolutely go for it. It's a bit more difficult today because of the spreads. I'm not not too enamored by those. But then I suppose the reason the spreads are wide is because you're likely to get a pickup in movement, and we've already had another 70 pip move within the first 15 minutes of the FTSE 100. And you know, as I said before, when you consider that used to be a whole day's movement, it's pretty pretty scary in some respects. You know, pretty volatile out there.
Well, here's the other thing, Ash. Too. You know, look at last Monday, and the market just. This is Kiwi US dollar I'm looking at, right? The market just went disappeared. For the briefest period of time and came straight back. Yeah. Look where we are now. 1 week later, almost to the minute, we're back at the same point that went to.
Yeah.
So, you know, how do you trade this? How do you get into the market and go, well, okay, I'm going to put my stop. If we're going long here, we've turned around, we've got a big rejection bar here. Let's get into the market on the top of this bar, for instance. Good luck with that.
So, I mean, I don't know. I haven't got a clue where people are going to be getting back in. You know, the FTSE is now under 5,000 when you consider it was you know, 7,500 to 8,000. You know, just a matter of what less than 2 months ago. Anyway, you know, 6 weeks ago, It was all the way up at the 7,500, and now we're down to below 5,000. It's just a crazy market right now, but it will settle down. This is the thing, you know, this will settle down. And, you know, with things being this low, this is what I mean about keeping your money in your pocket if you don't really trust the market right now. Oh, yeah, sure. Yeah.
And there are a truckload of questions we need to get to as well.
Okay. If you stop sharing.
Oh, yes, that all important thing. Hang on a second. I've got an interruption there. Is it done?
Yes, perfect. Yeah, looking at this, you know, it's tanking again to the downside, and there was a 5-minute opportunity here, but as I said, I just don't like the spread. You know, seems a bit stupid really, because it's only a 4-pip spread after a 100-pip move, but things like that are just very, very off-putting in such a volatile market. But we have to be looking for the shorts, because that's the direction of the market right now. You know, it doesn't the data's not improving, the sentiment isn't improving, and the price action is just not improving. So while that's going on, I mean, look at this bar on Friday ended here. Huge gap to the downside, and we're just off to the races again. You know, we're just off and running back to for some further downside. The S&P futures, look at these guys. You know, they've had to close again because of the huge move to the downside. So moves are currently vicious, and they continue to be the case. Monthly chart, I'm kind of looking at potential levels this could stop at. Could have stopped where we were. Did pause for a little while. The next steps down here at around about 48.18. So another 100-pip move to the downside is fairly, I suppose, has got a pretty good chance of getting down there. Then after that, we kind of settle down around about 4,500. So we are currently sub 5,000, and as I say, it just doesn't look like the brakes are coming onto this one. You know, it looks like it's got some room still to travel, and I've just looked around some of the stocks, and if Ocado's actually doing okay. You know, that's one stock which I bought up on Friday, and they are doing okay. They're down a little bit this morning, but by no stretch the same amount as a lot of the others. International consolidated airlines have opened up lower and continue to move to the downside as well.
How far down are they, Ash? Like,
I mean, if we were sort of like talking about where they were at the start of the year, they reached 672, I guess, pence a share, and now we're down to 255. So we've almost come down 150% from the highs, pretty much, maybe even a little bit more than that. So it's, you know, it's in awful trouble. It's way down. So yes, I can't see travel stocks really having too much in the way of help right now. Obviously, you know, Virgin have asked the government for some aid, and maybe if they get the government actually come out and say that they're going to give them some aid, maybe that kind of thing could halt the slide. But yeah, you know, struggling to find the right sector to really kind of put some money in right now. As I say, I liked Ocado, because Ocado is a delivery service for, you know, they deliver food, and within 2 weeks, the government have asked the over 70s to self-isolate for 4 months. So you think that, yeah. But you think that companies like Ocado will do pretty well in an environment like that.
It's a good strategy. I don't mind that at all.
Yeah, and I was even thinking maybe Just Eat as well, you know, which is a takeaway service. But my only issue with Just Eat is that maybe takeaway could be slightly it's a bit of a luxury to a degree. So I'm not sure exactly how well they will do, but maybe, you know, they'll probably do okay in an environment like this as well, where people just, you know, because they actually do have some nice companies that they do some business with, which do actually sell fast food. So it's not all expensive kind of Chinese and Indian food. It's you know, there is some KFC and some McDonald's in there as well. So I think something like Just Eat might also be a trade. But yeah, market is going to continue to come down. I am looking to see where we will stop, just to see if we can form some sort of base. But as I say, better just to stay on the sidelines. Do some education, do some work on yourself, I think, and then come back to this market when it has settled down a bit.
Yeah, look, if you manage to find a decent retracement and nothing has changed in terms of world events, then probably you're entitled to get back into the shorts as well. I really can't advise more than that. Yeah, I'm with you. I'm going to be on the sidelines until I see a reversal. That's pretty much where I'm at.
Yeah. Yeah, already down 160 pips this morning, and we're only just over half an hour into trade. So yeah, pretty bad news over the weekend, and awful, as I say, awful numbers from China. You can't really sort of see why this market would do anything but go down right now.
Okay, questions. Will EU now cut rates too? I'm going right back. This is LT. G'day, LT. Will the EU now cut rates as well? Great question.
Will the EU cut rates? They will use probably everything in their toolbox before they have to do that. So they may have to. They may not have any choice but to cut rates, but they will try and do everything in their toolbox. The German government came out on Friday and said that it will be adding stimulus and do everything that's necessary to halt the slide in the German stock market. And you think that European governments really across the board will be doing something similar. Christine Lagarde is reticent to cut rates. She just really does not want to do that. She's not keen at all to be going down that particular route. So yes, they probably may have to, but it may still be a little way off. I mean, I think it's quite telling how quiet they've been on that particular front. So it's not necessarily looking like it, is it? At this particular stage, but I think they're going to use other tools first. Would be the first answer to that. I think they're probably going down, and there's a little bounce in the FTSE, actually quite a significant bounce on the FTSE just off these levels down here. So as Jeff says, the technical levels here, the technical price points are getting some buying, and it could just be algos kind of kicking themselves back in again. But just seeing some bounces off this level, and if it goes through here, then you'd suspect that this would be the next one down here, which is quite a significant way down. But yeah, look at the fairly nice bounce off that particular line down there off the monthly chart. Not so noticeable on that, but you can see it's off the 5. It's just at a pretty good 60 pip bounce within a few seconds after touching that line. So maybe we start to form some sort of technical bottom down here without having any reason to buy it back up again. So again, best just kind of sit and wait and watch. There's the level down there. But I wouldn't have thought so. I would wait for that particular announcement, mate. I wouldn't be speculating on that, because I think that there are other tools that they're going to use first. And they are probably hoping that those tools will work. So, and I guess
you're on that as well.
Yeah, and I suppose the question really relates to euro strength, and I suppose for that particular reason, I think euro dollar at this particular stage would probably be a buying opportunity.
I'm looking for that, but I can't see it at the moment. I'm still a bear, for a little bit on the euro, if that is the reason for the question, LT. Melbourne have also cancelled the F1. Yeah, absolutely, Lewis. That's it's just crazy, mate. There's another, I don't know how many, multiple millions of dollars that won't be spent. So yeah, that's going to hurt GDP figures at the very least, but certainly the vendors around the place. G'day, LT. Yes. Euro and pound completed Friday's triangle. We went through that. Well done, mate. Well spotted. Any comment for S&P 500? Direction opening later equals, well, this is the third Monday of the month, so we've got an ATW trade. Would you be game to take it, Ash?
Do you know what? We're certainly not a 25 pip stop loss. No. And that's the problem. But yeah, I don't see why not. I mean, actually sort of like directionally, I don't know. I'm looking at this. this trade here. I wonder if there's there's 100 pips stop loss down there. There is a trade on the FTSE right here. You know, there's 5 minutes. It's only a 5-minute chart, but considering the volatility and it's actually a fairly nice line there. There's a little upside trade. I'm not going to take things like this personally, because I think they're still a little bit too well, there's way too much emotion in that particular bar, but there is a little trade there. If anyone wanted to put on like 10 cents a pip, then why not at that point? But yeah, the S&P. Yeah, I don't. What's that, mate?
It'd already be dead by a long way.
What would be
the S&P trade?
Yeah. Oh, okay. So if you'd woken up. And yes, it would, wouldn't it? Yeah. So if you'd put it on early doors this morning, then yes, you would be done. Except for, I mean, I'm not 100% on the S&P. Is it the S&P? It's, you know, do you put it? You know, yeah, it is, isn't it? It's as soon as the market opens, and actually you're trading the derivative. So yeah, actually the S&P won't be on today. But I wouldn't be surprised if we actually see a bit of a rally in the S&P by the end of the day. But the problem is with that particular strategy, the strategy dictates 25 pip stop loss, and there's no way that you'd go with that in a strategy. I don't know what. No. Yeah, not sure what the multiple would be, but I wouldn't be surprised at all to see the S&P actually level off a little bit by the end of the day. Not to say that will happen, but you know, there's a school of thought that I kind of go by, that when all news effectively is known, then as bad as stuff can continue to come out with, the market probably won't go any lower because it's already anticipated it. So there'll be a point where all the bad stuff that continues to come out will be priced in. Now, I don't think we're there yet, but I can't see us getting too far away from that particular facts. You know, we can't be too far from that, where people have already priced in all the bad news. And what it comes down to is people will be buying stocks on a price to earnings ratio. And this is what you have to really kind of calculate. The trouble right now is nobody knows what the earnings are going to be. And when you get numbers as ugly as we had in China, which I will just quickly kind of like put on the screen, I'm sure everybody's seen this, but when you look at these ugly numbers from China, down at negative 13.5% industrial production year on year, down negative 24.5% on fixed asset investment and retail sales, also down 20%. Then it doesn't suggest that those numbers are, and look at their forecasts. You know, even with that, as bad as things were, they're only forecasting negative 3%. So they're not ready yet. They've sort of like got beyond the bad data being priced in point as yet. But it certainly looks like there will be a point where that will happen. And at that point, then things like the S&P third Monday of the month trade will probably still be okay. Maybe not this month, but maybe we could be looking next month and it'd be back to being okay again. FTSE 100 is just starting to pop up. So this is a really nice bar. You know, on any normal environment you take this, but it has got 110 pips stop loss. But you know, and you don't know what you're grabbing out of it. That's the problem. Such a strong trend to the downside, it might stop here and you'd be done. Which is only 60 pips away, so probably not worth taking. But what a lovely bar, and it probably will be a fairly good indication of how powerful these bars are. This is a really good hammer, really classic, great hammer. Even on a 5-minute chart, it suggests upside. It just doesn't tell you how far that upside is going to go, but that is suggesting a pretty decent hold down there. And I wouldn't really be waxing that lyrical about it unless we were off monthly levels. But we are. You know, there is a significant monthly level down here at 48.18 or 48.20. So we are kind of having a fairly decent reaction.
They're the kind of things I was talking about earlier. You know, that's where you want to start paying attention, I believe.
Yes. Yeah. Yeah, those significant technical points. Yeah, you know, and it's interesting because this was the last one up here. That was the last significant technical point there. And if you're thinking about structure, then this really is the next one. So to get a bounce off this level is not wouldn't be that beyond the realms of possibility. But you've really got to go in, you know, very, very light as always, and probably not off a 5-minute bar. To be fair, you probably wouldn't trade it off that, but that is fairly significant. That what that's telling us is that whether it's algos or whether it's genuine kind of human beings trading this, there is a level down here that we should be paying attention to if it comes back down here and starts to create some sort of bottom down here. And as I say, we're really waiting for that news and data to become priced in, and maybe this is the price that it gets to before it does start to turn itself around and say, fine, enough's enough. We get it. The PE ratios are around about right down here, so we can start buying up again.
Yep, that will happen. Just got to pick your time. You got to be clever. That's all. Well, you don't really. You just have to follow the way it looks.
Yeah, exactly, mate. Just take your time. I think, as you say, it will unfold correctly. There's no point in getting to every emotive move. The 5 minute hammer has just turned into a 15-minute hammer. So it could be even a little V-shaped recovery on the day, anyway. Which is again why I wouldn't be surprised at all to see the S&P, at a fairly decent level today. I don't think it wouldn't necessarily tank today just because of where we're at over the weekend. Because as I say, the pricing in factor will start to take hold at some point.
Okay, pound US dollar weekly head and shoulders pattern. Yeah, look, I was looking at that last week, Chandru, and I thought the rising head and shoulders was a reasonable chart pattern. I guess I should share that, or let's just put your pound chart up, mate.
Yeah, this is the pound here. So I guess on the weekly, yeah.
If you draw a parallel or a channel between the two highs that are the neckline, if you like.
Yeah, you were looking at that.
I was looking at a line, going up and then coming down from there.
From here?
Yeah, line going up through before the break short. I wasn't looking at that as the shoulder. I was looking at the previous weekly bar.
Down here, you mean?
Yeah, now you got the idea.
Yes, I was the same, mate. I was totally the same. I was looking at this, but you would have wanted that right shoulder to hold here, wouldn't you?
There, yes.
Yeah.
Yes. So last week's bar, which is a massive, massive bar, I think has put me off that one, mate. Yeah,
I'd agree with that. And this is the problem. Some of those patterns are just going to, I quite liked it here. When we got to this price here, and I think I was calling 125, and somebody was saying that was kind of low, but I didn't, I wouldn't have minded that 125, but now it's even gone even lower than that. Mm-hmm. But 125. So if it managed to hold along here, I'd have been all right with that, because it would have just given me, pretty much an equal low down here and then start to spring up. But down here is just not as clean. It could still just about qualify as a lower shoulder even, but it's just not as clean. So I don't like the look of that either. And this is the problem, when you start to draw lines on these charts. Let's have a look where it could go here. And that could get us down to that point. That's probably the level I may look at as well. Yeah, it's just looking. I just think that's too difficult with a bar like that. It makes it that's going to make it an incredibly difficult trade, in my opinion. So not interested in that either.
Yeah, look, last week's bar's there for a reason,
Yeah.
It's very difficult to trade against that until you've got more information. It really is.
Yeah, totally agree.
In my opinion. So pound dollar projection was 122. Okay, well, we're nearly there. And that's, I guess, comes into exactly what we've just been talking about, mate. Yep. So the triple bottom seems to be, this is euro dollar, is it? No, it wouldn't be euro dollar. Is that pound we're talking about, triple bottom?
This is the pound here, yeah.
Oh, on a monthly chart, wasn't it? Was it a monthly chart? Did I have a triple bottom on a monthly chart? I think. Yes. Now it's all coming back to me. So
Yeah.
I think probably, you know, we're getting closer to the mark with 122. That would give us a triple bottom. And well, you know what? I'd like to see it sneak through there and then take out every single stop that is in place underneath those lows. And then I'd like to see it give me a higher low, and I think we can rock it up from there. So that's kind of the way I would approach that. And that's going to be exactly the same as I approach every single one of these. When I said we're at great levels, I'd like to see those levels broken, because there's going to be a ton of liquidity sitting underneath those big levels. And I think this is maybe the opportunity to take advantage of those levels. So let them break and then come back. I think that's what I'll be looking for. Of course,
Falling wedge on the pound. You know, this is the pattern I think we've probably got. I think we've got this falling wedge going on, and it's not great because it's already kind of collapsed on itself. But I think that's the chart there. That's the pattern which actually leads us right back to these highs up here. But it's looking poor now. You know, it already broke out and kind of came back to kind of give us some sort of structure, but now it's down here. This still could actually work out. You know, interestingly, this still could work out. And I've got to say, on the near term, I quite like the pound. You know, I don't think the pound is anywhere near as bad as this. You know, as the price suggests. I think the pound's a lot better, but. Yeah, there is. I think this is the pattern, mate. That's what I'd be looking at anyway. I think there's a falling wedge there that could be of interest.
Okay, I don't have a problem. Where are we? Does anyone have an issue with Fusion Markets? They are not able to send updates. I'm not sure what that means by updates. John, I don't have a problem with them yet. In fact, I think their fills are the best I have witnessed in recent years. They're absolutely filling exactly where I want them to fill. So, and I can't ask for more than that. Haven't had to withdraw any money yet, and that's the next best thing I can give you with a broker. But I actually haven't got an account with them. I'm trading on an A2W account here. So I can't really give you a definitive answer on that, except that their fills are excellent, absolutely excellent. Watching the market short time frames, Zoom is doing good for US stocks. Zoom, this platform, that's interesting. Yeah, I've no doubt about that. They'll probably be after. Zoom is doing good for US stocks.
As in the company?
Yeah, I'm not sure what that means, LT. If it means this platform we're trading on is doing good for US stocks.
Do you mean
I don't see how it would be helping US stocks, frankly, but
Zoom maybe saying that Zoom is a buying opportunity as a stock.
That's what I'm thinking as well.
Okay. Could you give me the I was looking at Zoom actually. I quite like Netflix, and Zoom was something that I was interested in. Let me just see. Who is Zoom?
While you're doing that, mate, Crystal, Mr. Start comment for S&P 500 direction opening later. We did cover that, I think, to a degree. Hopefully that has satisfied that question. Did you find it, mate?
Yeah, I got Zoom. Yeah, got Zoom. Okay, let me have a look.
Crystal's also got a plan to pick up healthcare and baby goods stocks. Corona babies arriving around Christmas. Yeah, wow. That's deep, Crystal. Geez, I hope that doesn't happen.
We had the first child born with coronavirus over here over the weekend.
Wow.
Yeah. Doesn't seem to be so dangerous for the little ones, though. You know, that's what everything I'm reading.
I've heard that also.
I like Zoom. I have to say, I do like Zoom. Zoom has held up pretty well. But the problem is with Zoom. I'll show you Zoom. I'll give everybody this chart here. This is Zoom.
Crystal, you've got a very apt name if you're asking for the S&P down limit. Yes, and you know what I mean by crystal balls there. I'll give you my opinion in a minute, but I have never traded the S&P 500. So
S&P down limit is 7%. Then I think there's a break at 7%, then 13%.
No, I think Crystal's asking is how low can it go?
Okay.
I think that's the question.
0. It won't go to 0. This is Zoom. Now, Zoom has not suffered anywhere near as much as other stocks, and I grant you that. I do like Zoom, but you don't really have a decent setup. There is a head and shoulders pattern on Zoom, which is not fantastic, but it's holding up pretty well. You know, you consider what the price action has been throughout February for the S&P. Look at Zoom, ramping it up to the upside. And this is the sad thing, you know, with some of these. FTSE 100 is starting to look fairly attractive actually as a little intraday trade. This is the thing with all this stuff. Zoom has done really well over the course.
Totally get the sentiment and the idea, is everyone's going to work from home, right?
Yeah, absolutely. But you know what? This is a lesson in some respects of getting on top.
Lateral thinking.
Yes, because Zoom from February, as soon as we kicked into February, bang, we were off to the upside. Now, if I show you the airline stocks, so this is the International Consolidated Airline Group, and look at the difference. February actually was holding up okay, but then all of a sudden, bang, gap to the downside, then gone, you know, to the downside. And really, you know, when we're kind of like looking at taking opportunities, or when I was looking at taking opportunities, you know, I've had my head in the FTSE 100, but actually makes no sense to have your head down there. It makes it actually much better to kind of look up and start thinking, right, which single stocks can we actually look for to have in our portfolio? And something like Zoom is a great opportunity, or would have been a great opportunity, but it's a bit late now. And this is the thing, you know, I've taken a trade in something which I think was still viable last week, and it's holding up okay right now. But when it comes down to something like Zoom, and there are other opportunities, don't get me wrong, it's not late to take advantage of the news that we've got and that we will continue to have. There's still opportunities there. But when I think of like companies like Zoom, yes, I think they will probably continue to do well. But the short-term run on Zoom is probably around about done. And we need to be looking for the next one and the next one and the next one. I would say if you can get in, then, you know, you're still going to need a decent technical setup with something like Zoom, and maybe it will arrive. There's not a buy signal today, for sure. But again, you know, you have to consider what we've had going on in the stock fluctuations in stock prices, and really what we've got is a stock market which has already been pretty badly oversold with a lot of news and data. So at what point do we get to where the data and the news gets priced in? And if you're looking at something like Zoom and you've already missed that huge run that it's seen, you know, if we go back to that, you go back to Zoom, and since February when it was down to 76, you know, now it's up near 25, but in fact to its highs it was up near 50%. So, you know, it's already had a huge run to the upside. You know, is there much left in this with this particular story? Not so sure. And fair value on Zoom before we had all this stuff happening was all the way down here at 76. So now we're at 107. You know, at what point does that news and data start to get, as I say, priced in, and people just kind of like, you know, go back to going, right, well, Zoom in itself isn't ready. You know, the software just isn't quite there. So I'm going to cut back on a few of those shares. I was taking advantage of trading it rather than investing in it. Then maybe we see Zoom cut back. And, you know, we can check some of the financials in Zoom just to see, you know, what's the company like. Consensus is a hold. So actually the confidence in it isn't really for an outperform from this particular point. Turnover, Average turnover over 3 years is at 117%. We're down to kind of 47.3. Earnings per share at 26 is pretty good. I don't know what their PE ratio is. And I know this isn't really, a stock trading show, so maybe we shouldn't get too caught up in this, but numbers aren't great. Look at this current assets, total assets in Zoom, 215 million, I guess it will probably be, in total assets, and total liabilities 241 million. So the liabilities actually outstrip the assets. So when you're looking at it as a company, fundamentally, is it on very sure footing? And I would suggest not yet. Zoom might be an amazing company in a year or two to come, but it's not really ready there. And that's just two metrics. I'm not going to look at the whole thing because I know this isn't that kind of show, and I don't want to bore people. But that would suggest to me that the run in Zoom is all about trading it rather than investing it. And that looks to me like it could well be probably a little bit late in the story to be getting involved in that. And as I say, that doesn't mean that we've missed all opportunities out there, but I think this particular one may well be done. I quite like Netflix. Now, where is Netflix? Here. Quite like Netflix. Look at Netflix, completely different chart. It's tanked to the downside. Now look at, Friday's bar on Netflix was this lovely hammer here. So that would suggest that Netflix probably does have a little bit of upside. And I quite like the Netflix story because the thing with Netflix is they are, number one, providing some of the Italian market with free Netflix, free subscriptions, which would suggest that they might get some people hooked in a month or two to come. But the other thing is with Netflix is that they run an industry which puts people at home. It's a streaming industry which allows people to stay at home and relax and self-isolate with some kind of form of entertainment. And they've also done a deal with Sky recently where they're offering a package with Sky for Netflix. So I quite like this more than I do Zoom, purely because of how long in the cycle, if you like, in this short-term 1 monthly cycle that Zoom is in comparison to Netflix.
Okay, all very interesting. S&P down. I think we opened, hopefully. Well, if it's the question I think it is, then I don't trade the indices at all. What I'm suggesting from a technical point of view, if I'm absolutely got a gun against my head and somebody said, where's this going to, the S&P 500, I'm saying somewhere between 2100 and 1900. There you go. But I know zero about it. That's purely a technical thing. What is meant by the Forex factory if they say the actual more hawkish than forecast is good? Okay, with all these numbers on Forex factory, Chris, you will see that there's probably two that are filled in. One's blank, one says the previous. If it was a month-on-month thing, then that would be the previous number of that period. So the previous month recorded that figure. Then they'll have a forecast, which will be most times somewhere around that figure. And then, of course, when the news comes out, they've got the exact number. If that number is a beat or a miss, in other words, if it's higher than the number forecast, and that higher number is generally good for the currency, then that's exactly what that means. If it's more hawkish, if the actual is more hawkish, in other words, if it's more, let me use a word, if it's better, if I can put it that way. Generally, hawkish refers to a statement that has got an undertone to it. That's what that means. But in general terms, hawkish means bullish, if you can put it that way. So, which
is odd, isn't it? I mean, do you know what I find? I find the whole bullish, and I don't know why they sort of describe things as they do, but I always think the way that I started remembering what bullish and bearish is because bulls attack from below. They have their horns going down to up, so it's bullish, like the market's going down, up, and a bear will attack from above, coming down and swiping down on you. So that's but when you think of hawkish versus dovish, the hawks attack from above, so it'd be like a bear, and a dove flies, supposedly, is meant to be sort of like something which flies up. So, which would be bullish. So I think they've got the terms the wrong way around, personally, mate.
But the fact is, they have, and that's what they mean by it.
They have. Yeah, that's right.
So
That's
unfortunately, we can't change that, and it is what it is. So that's what it means, Chris. I hope that makes sense to you. It generally means that if there's a number and the number is better than expected, it is generally better for the currency. I'll put it that way.
Yes.
There are variations on that theme, but in general terms, that's what it means. Chris, what's the trade of the day? Exclamation mark, question mark, question mark, question mark from me. I haven't got one. I have got no idea what's happening next, to be fair. All I am doing is waiting for those bigger levels to be hit. And when they're hit, I want to see a reversal on them. And if I don't, then I'll just stay out of the market till I do. That's my answer to that one. You got one, Ash?
Yeah. Well, do you know what? It's difficult because I'm looking at the FTSE and it is tempting, to take a speculative trade, again to the upside with the FTSE. But I've got to be honest, I'm looking at this. So you got a nice 15-minute hammer here, really, gorgeous bar, really, really lovely bar. You got the same with the 5 as well. And I'm tempted to sort of like say, let's just get into the FTSE. But actually, the setup is so poor. And I still don't have, I haven't heard the news in the last hour. Maybe something's been said. I don't know. But I still don't have a reason to be buying it into this. And I don't want to sound kind of churlish, if you like, but my trade of the day is to not trade. I just, I don't really have enough reason to get into this market right now. As I say, I'm tempted to get into the FTSE long, but it's not a great trade. It's just a kind of, it's a great level, a monthly kind of level, but a brilliant price point, a decent looking bar, only on a 5 and a 15. And when you sort of like, consider it like that, you've got a monthly level being jumped away from a 5 and 15, and you're going to take a trade. It just sort of, saying it out loud is just ridiculous, isn't it? But the way the market's running right now, I think it's so ridiculous you may as well go for it. But I just, I'm not going to do it myself, so I can't say that this is the trade because I think we can be. I just think we can be patient, and I think we can be professional, and I think we can sort of like not get drawn into trading when we don't need to. This trade may go brilliantly, and if it does go, if this trade goes to the upside, it's probably going to make 200-300 pips, but with a market like this, you could probably make it on a really good setup, and maybe 200-400 pips on a good setup, and actually have a bit more confidence, and rather than having to watch this trade, even though you might put on 10 cents a pip, which wouldn't be so bad here. But yeah, I don't know, mate. I'm sort of thinking of this because there's no trade of the day. The trade of the day is to not trade. That's not my honest view today. It just looks like and I thought that even when I woke up, I just thought it's going to be tiring today. You get into some trades, it's going to be pretty tiring because it's so oversold that going and trading this to the downside has got maybe not like huge dangers because it's so suppressed, but it just doesn't make huge sense, being so oversold down here. But by the same token, there's nothing to suggesting that we should be buying. So we have to be still selling, but we are selling at a low, or we're selling at a low point. Maybe not at a low, but we're selling at a low point with indicators that have been not only oversold, but actually embedded to the downside. So that's how bad they are. And I tell you what, when indicators get this embedded, and I'll show you what I mean by that. When indicators get embedded like this, let's do it with this.
While you're doing that, I'll answer Chris's question about pound Swissy. Exactly what Ash just said is exactly my answer to your question on pound Swissy, Chris. It absolutely is breaking that level at the moment, but it is a very strong level that you're looking at. It's 116 the figure, and if you've got the kahunas to get in short here through that level, then wow, there's a bit of a gap underneath it. I've got to say that, but it is a strong level. And how low can we go? Question mark again. I've got no idea.
Yeah. This is what I mean by embedded. You look, this is an RSI indicator with a 14-period RSI, which is fairly standard for the industry, with a 50% line, a 70% line, and a 30% line. And when it goes underneath that, what you're looking for is for this to be within these boundaries. Now, we haven't been outside the boundary since the financial crisis. Now, I haven't got any more data on this particular chart, but look, embedded down here on a monthly chart.
We've got your previous chart, which is all those numbers and charts, whatever they were.
Okay, let me see what's going on.
Which was, what is that site, by the way? There's a question there from, I can't remember who it's from, but I did see the question. SharePad.
Oh, SharePad. Yes, it is. I mean, it is the.
That's the site, is it? SharePad.
Yes, that's one. That's one you're seeing, is it?
Yep. What's the one I'm seeing?
Oh, that's strange. Okay. All right. I'll tell you.
Oh no, sorry. It looks like YouTube's frozen. No, I've got your FTSE chart up. Sorry.
Okay, great. Yeah, SharePad's amazing, but it's a subscription based website, so it's not free, and I wouldn't encourage anybody to pay for anything until you are ready to understand the data. And you don't need to. Yahoo Finance will offer you some pretty extensive charting information, so you don't have to pay for something like SharePad just yet. But I would encourage you to do so if you are trading stocks and want to know more about stocks. But it's really very, very UK stocks, and it does have American stocks as well. But it's an amazing investment tool for analyzing the fundamentals. That's what it's there for. But as I say, for right now, if you're new to it, earn your stripes just by going into Yahoo Finance. You don't have to pay for a subscription like SharePad at this stage. So where are we at? Sorry, yeah. So this is embedded down here. That's a monthly. Now the weekly is the same. The weekly indication on the RSI, so the relative strength index on the weekly, is also embedded down here, hugely embedded. And obviously the daily charts, you're literally just going down the list. Daily chart has been embedded for quite some time. And the problem is with embedded is when things are embedded, they tend to fly in the opposite direction without you even having chance to sniff. So you're going to be very, very careful when markets are embedded in or indicators are embedded in this kind of scenario. It does make the FTSE even more attractive to a certain degree, while I'm looking at it and thinking actually that there is a tradable opportunity. This is the kind of thing I'm talking about. Embedded down here, then bang, flies to the upside. In one foul swoop from this point right the way up to this point. We're looking at 400 pips. Doesn't look like a big move here, but it is. It's a 400 pip move there. Same kind of thing when we sort of like hit this one, and it's when it comes out of the embedded state that we kind of get a big move. There's a massive gap to the upside there, and then we're off. So you can go down the list really and start to look at those. But embedded is when it's embedded, it does suggest that it's incredibly either bullish or bearish depending on which side it's embedded to. But also a very, very dangerous place to get bullish or bearish, because there is likely a significant move in the opposite direction coming. This is the embedded point that we got to just before the huge crash to the downside. Just got embedded on the hourly chart and then bash straight the way down. Within by the time it recovered, it had gone down 1,000 pips. So it's fairly, being embedded is fairly significant. Actually, sorry, excuse me, that's not 1,000 pips. That's 100. That was significant for the time, because the average true range at that point was more like 40 pips on the hourly chart. So, but yeah, the FTSE is starting to look fairly attractive, mate. But as I said before, I'm not going to trade it, but it is very, very tempting to be looking at this FTSE 100 and and wanting to trade it off the back of these two hammers. Incredibly powerful bars, and
that's where your experience will kick in, and you won't trade it. So
yeah, I won't. You know what? I won't. I'll walk away from this one and just leave it. and leave it as it goes. Because what could happen here, and this is what I was just looking at with this, is that there could well be a movement to the upside, and then we start to kind of like, you know, form some kind of neckline and then come back, and that would be a better pattern and pretty much the same price. You know, if it comes back here, then there might well be an inverted head and shoulders down here, and if that was the case, then, you know, possibly we start to look at that and get a little bit more excited about it. But that's what it will start to look like, you know. But we'll see what happens there. But the FTSE's looking okay today for a push higher, and wouldn't be surprised if we see the same with the American markets too.
Okay, unable to trade S&P 500 infusion markets. Why is it so? I believe it's been suspended until US Open. I think somebody said until the US Open, and that all makes sense because of the movements.
Yeah, S&P is closed. Look at this same thing. This is the S&P. Nothing, no price movement because of a limit down on the price action.
Rick, this is an A2W account, so it's actually not my account. So I don't currently have an open account with Fusion yet. So I actually don't know what sort of account this is, mate, to be fair. It is all I know. It's a main and live account, but apart from that, I don't know any more. I'm testing it. But the one thing I would say, as I said before, the fills are superb. They're absolutely to the micro pip. Really, really happy with the fills that they're doing on that. So yeah, all good. But as to what type of account, mate, sorry, can't help you. And g'day, by the way, great to have you in the room, and haven't caught up for some time. Let's change that shortly if we can. Hi, Lexi, to you as well. Zoom will do well, blah, blah, blah. Mr. Yep. We answer the what software is that? Means higher than forecast. Yep, hope you got that one. Trade of the day is learning to watch the action. Good idea, John. You can learn a whole lot by watching and doing nothing. Agree with you. Short, love this one, Crystal. Short Guinness. Ireland closed the pubs. What a good plan.
Oh yeah, do you know what? Yeah, do you know, that is the kind of thinking I'm talking about.
Exactly. Lateral thinking. Brilliant. Love it. Outside the box.
Yeah. Do you know, it's really interesting because actually Guinness are owned by a company called Diageo from memory. Let me double check that before I tell everybody the wrong one. And I was looking at Diageo for a possible buy, and I'll tell you for the reason why. Last time we had the financial crash, everybody went out and bought a load of whiskey. And Diageo did pretty well out of it. So, yeah, even though I think they do own Guinness. I'm pretty sure they do. They own Guinness. So, you know, if they do own Guinness, then maybe Guinness will suffer. But Diageo themselves as a company actually might do quite well out of this.
There you go. There's always two sides to the story. PL, what about dollar Swissy? I got in short at 94.25. Any advice? Yes, I do. If you're in the trade, well done. Dollar Swissy, let me have a look at that. Where'd you get in? 94.25. Okay. My advice would be to get safe in the market as soon as you possibly can, and then just let it rip. That would be my advice. And the reason I say that is I think if you can find a way into a trade at the moment, you've got a very good chance of going a long way. But on the flip side of that, you've got a very good chance of being stopped out quickly as well, because in a volatile market such as this, the price can vary very much in a very short period of time. So my advice would be to get safe as soon as you possibly can, and then just sit back and watch. That would be my advice. Ash, any more?
No. I think that's right. So I just logged onto the YouTube just to have a look at the questions. Just so I was in with you guys. Sorry, and you were talking about the dollar Swissy, yes. So let me just quickly catch up with you. Dollar Swissy. What were we looking at? Sorry, with this one, could you?
Yeah, Crystal got in at 94.25, I think she said. So she's 25 pips to the good.
Yeah.
And wants to know what to do next.
94.25. Can we ask the strategy? We know what the strategy is.
We can ask whatever we like.
Okay. What's the strategy?
Actually,
yeah, I don't know.
There's a nice little dominator slingshot trade in there as well. Coming off a double top. I don't know that Crystal's a slingshot trader, but maybe she's had a good reason to buy that, to sell that. Don't know.
Do we know? Yeah. So Crystal. Oh gosh, yeah, that does look pretty good. It really does depend on how it's going to end today. Dollar Swissy short. Do you know what, Crystal? My personal thought on anything dollar is if you can get into a short and stay pretty safe with it, then it'd probably be worth holding on to it with interest rates being cut. And I have to say, you've got a fantastic little setup on the daily chart as well. So it looks pretty good to me. But it depends on what time frame you're trading it off. If you're trading it off the daily, then your stops will probably be around about 150 pips up, I'm guessing, which takes you right down to the lows and able to take profit around about 1-to-1. Is it still on my chart here? I think we are. So this is what I would see with this one. I can see the pivots there, but I really like this as a daily strategy almost. You've got a pretty nice break, a test there, but now we're starting to break to the downside of this bar. If this looks like this by the end of the day, then I'm presuming that you've got stops at the highs, and if you do, then aiming for the lows looks pretty good to me. And as I say, with the interest rates being cut again in America, then anything against the dollar, if you've managed to get into a trade, would look like a pretty good run. Yes, we are at support here, but really, at this stage, haven't really got a reason why this would be supported. Likely to bounce here. You know, there's a fairly decent probability that it will bounce to that particular point. But I think that's all it will be. I think it would just be a little bounce and then gone again because we are through there. So maybe bouncing back up to this level here, which means don't keep stops tight. I hope you're not in a short-term, shorter-term time frame, because if you are, it's going to be a bit trickier to manage. You got in at 42.35, which is great. So I wouldn't be moving stops too close as yet, but you can certainly, after the bounce, after it starts to bounce and move down, then those stops can start getting shifted down. I mean, if you have got a stop up here, no reason not to move it down to this particular level, because this should hold. And if it doesn't, then I'd be a little bit concerned. And it might even be one of Jeff's setups if it was to get through and come back again.
Mm-hmm.
And, it may well take out this high. So no reason not to move stops. It's an hourly chart, by the way. No reason not to move stops down to this level now. If you started off at the highs, but I wouldn't be moving them any closer. I think you've got to give it some room to kind of develop in this area, see what it decides to do, see what patterns it decides. And even if it does kind of manage to creep back up again, it could still dive down. So leaving stops at that particular point, I think would be fairly prudent.
Okay, happy days, guys. I've got to go fairly quickly, but I know there's a few more questions in the box. Let's see if we can get through them. Judging by the way US stocks behave after Fed pumped in so much money and Fed cutting rates to zero, Fed haven't cut rates to zero to the best of my knowledge, but maybe they are on the way to that. Isn't it very likely that US indices be going bearish again? Look, I don't know that there are any rules right now that are consistent with history, because there's so much going on. Coronavirus is just throwing the markets into complete disarray as far as I'm concerned. I think US indices will be judged not by what the Fed's doing at the moment until we get rid of the threat of coronavirus. But I don't trade them, so I'm probably not the best person to ask that question. Ash, you're into that a little bit better than I. So
yeah, I mean, when it comes down to things like that, the reason that the Fed are doing what they're doing is to try and promote stock growth, US stock growth. So and trying to help the indices out. So the policies that are being put in place are all there really to calm the stock market down, so people can get back to buying. And as I said before, we're going to get to a point where all the information that we have, you know, however bad it continues to be, will be known and priced in. So there will be a point where the only way is up for the stock market. Not sure if we've seen enough of a genuine pattern hold yet for that to be the case. But really, you know, the Fed's actions are there to promote buying in the stock market and not selling. The thing that's going to continue to drive this down is when the numbers come through, because the numbers haven't come through the States yet. And this is the issue. You know, any moves to the upside will probably catch people on the hop, because while everybody's sort of like thinking, oh, at last, you know, now we're starting to form a bottom. Very, very unlikely. What's the most likely thing that will happen is that we form an area to have a little bit of a springboard up from, and that area just becomes an area that we might return to get a double bottom in. So we should be looking really back down to that particular point again. You know, yes, we have a bounce point, but maybe the second time round, when it comes back down, we start to look for buying opportunities. But initially, any bounces to the upside are probably going to still be sold off, because the data's not come through. And the data that is coming through from China specifically, as we looked, is absolutely atrocious. And you have to ask yourself, the reason that you are buying stocks is because their price to earnings ratio is validated by the fact that they are getting earnings. But if the data comes through and it's proven they're not getting earnings, then there will be another route. So yeah, I'd be a little bit cautious about saying it's going lower just yet from what the Fed are doing. You know, that, as I say, what the Fed are doing is probably likely to promote it going higher. But there may well be something else that promotes it going lower, like the knowledge of where companies are really sitting in this market, because nobody knows just yet.
And that's it's part of the whole dilemma, and that's why it's very, very difficult to trade the market at the moment. Logic and what is happening in front of our eyes are not the same right now. So, you know, that's why I'm finding it very, very difficult to do anything until I hit those extreme levels, and that's why I'm maintaining that position. CAD's really difficult to trade anywhere but short at the moment, in my humble opinion, because of what's happening with oil, and I can't see oil rallying anytime soon because the a lot of the major users of oil, aka airlines, are not in the same mode that they were 2 weeks ago, 3 weeks ago, whatever the case may be. And the more people stay at home, the less oil is going to be, et cetera, et cetera, et cetera. So the demand for oil has to fall, in my opinion, until we see the end of coronavirus. And the supply of oil just keeps pouring in and in and in. That doesn't equal a strong Canadian dollar for me. But as soon as that settles down, then I think things might change. But I can only see CAD yen being a sell. Ash?
Yeah, I'd agree with that too. I mean, I don't have enough of a handle on the rest of the Canadian economy, but I wouldn't be looking at the CAD personally. You'd also have to think that if the Fed have lowered interest rates, Canada, you know, being such a close neighbor to the States, will they be the next to follow? You know, and even if they're not, will people speculate that they will be? So I'd also be on the side of the CAD yen sell probably right now.
Yeah, I think it's the only sensible thing to do at the moment, to be fair. With so much volatility here, how do you control your stop loss? Yeah, what a great question, Chris. Get it above the most obvious level if you're going short, and below the most obvious level if you're going long, would be my only advice.
Yeah, and my personal advice is to, you know, have a look at what you're trading. You know, it doesn't matter what it is. Bring up your chart, open it up. Let's say that you're trading the euro dollar, for example. Have a look at euro dollar. Have a look at your time frame. Are you trading the hourly? Are you trading the daily? Are you trading the 4 hourly? Again, that doesn't matter. And then go to your indicators. Bring up your average true range. When you have your average true range, 14 period is what, that doesn't really matter. Then just check out, you know, what it's been over a specific period of time, 14, 20. You know, you kind of want to know what you want to take into account, what you know, the range that we've just had. So maybe as high as 20, as high as 30 or something like that, to make sure that it kind of gets a decent read. On this one, it's 42 pips. So, I would want my stop loss at least 42 pips on the euro right now from entry. So just have a look at your average true range in relation. Now, if I go to the daily chart, then that changes to 93, I think it is. So that's where, I'd want my stop loss at least 100 pips on the euro. So have a look at your ATRs. It's a really, really good gauge of how volatility can affect your particular trade. And if you know that that's the average true range and you've got a particular entry, then putting it under the last price level, if it's only 50, it doesn't make any sense. But if there's another price level at 100, that makes a much more sense as an area that may well hold as an area for a stop loss. So use the tools that you have as well, I would suggest.
And along with that, when I said get them into outside of the most obvious place, that is one of the most obvious places where the average true range is. Pivots are the same, get them well above them or below them, as the case may be. Where you would normally use a candle, I don't think a candle is probably strong enough anymore. You need to look at those bigger picture levels, be they horizontal, agreed. Be they pivots, be they trade lines, trend lines, whatever. You've got to look outside of the norm, if you like, because we're not in normal times, and that's it's just a fait accompli. We've got to look outside of those areas, and yes, it does knock your potential reward to risk ratio around a hell of a lot in the initial circumstance. But if you consider that if you get it right, the market can go 2 and 3 times where you would normally anticipate it to go, because it will smash through intraday support and resistance levels. There's no question about that. Again, it's the same point. Look at the big picture levels. That's where your support and resistance really is at the moment. Do you still target take profit to horizontal lines or WR1 or WS1 in this volatility? Again, look at exactly what Ash has just said. Look at the bigger picture. Go, instead of looking at just the intraday levels, just go a little bit beyond them, and you'll probably find that there is a stronger level not that far away. Get outside there. That's in my opinion where you need to be.
Yeah, and also look at them as soft levels. Soften those levels. So don't be absolute about those take profit levels, because this market is not holding levels right now. It's going through them, and you want to take advantage of its potential move. And if you are with the trend, then those levels should be softer, because it's got a greater likelihood to be going with the trend right now, probably as well. With these, they're pretty strong, the trends as we look at them.
Absolutely.
So yeah.
That fear, panic, momentum thing is not going to stop right now. I can assure you of that. Guys, we have really got to go. It is.
Yeah, we do. Yes, you can, Kumar, by the way. You can use them for everything, ATR.
All right, mate, are we done?
Yes, we're done.
Happy days. Guys, thank you so much for being here and all those questions. We hope we answered them to your satisfaction. If not, then you know what to do. Tell us we're mad or kick us up the bum.
No, right as a postcard. That's what they used to do in the old days.
Something like that.
Put it on a postcard.
All right, we'll be back and we're going to do it all again tomorrow, are we not?
We are indeed, mate. 5 to 8.
5 to 8. That's the date. Don't be late. See you later, guys. Have a good one. Bye-bye for now. Thank you for all the thanks.